I look at this with a really, really simple, straightforward perspective, which is we've been talking about all of these companies maturing. What do you get when you mature? You get slower earnings growth. They've got about 7% earnings growth, trading at 24 times earnings. What would I pay as a portfolio manager for a 7% earnings growth? I don't know, a market multiple, but I'm not paying that big a premium. And I think that's ultimately what keeps a lid on Microsoft. Like, no offense, but I don't think you're going to have a home run on this year.
Did I say I'm going to have a home run? Did I say the stock's going to rally?
Okay.
I said none of that. What I said was...
Why'd you pick it in the stock summit to do nothing?
What I said was by the end of the year, the fundamentals, which are resilient and good for this company, will be restored. And I think that will be what wins out.
But then do you think that the earnings growth is going to exceed 7%? Because what earnings growth do you need to justify 24 times?
I think that you're seeing a deceleration in cloud. And I think ultimately in the coming quarters, you'll see a re-acceleration in cloud once again.
Okay.
Bill Baruch, you own the stock too. You trimmed it a little bit last week. So how are you feeling about it? Whose side are you on?
I think you got to own it in portfolios. There's a repricing going on. There's a little deceleration in the earnings, but secular trends continue, and the cloud is a secular trend. There are 100 million workers in the U.S. that are going to be working remote, and they're going to be on the cloud.
Well, so what? That doesn't mean you need to pay a premium to be on the cloud. I mean, why do you have to pay what Jenny was talking about with the multiple, 26,
you're
27 times?
You're not going to get a 14. I mean, that's where it was in the Great Financial Crisis. It's not going there.
I'm
not saying you need to push it to 26, but I mean, I think it owns some portfolios here as a ballast. I think it's, there's this sort of bottom feeding out right now. I don't think it's going to get a lot cheaper than this. And I think the market in general is not going to get a lot cheaper than this.
Weiss, you do think it's going to get cheaper than this.
I do. And I don't know why you have to own anything. I don't know why
agree.
you have to own Microsoft. Why? Because it's Microsoft?
Why are you looking at me? Why don't you ask Bill? He said...
Well, because it's the first time I'm on set with him, so I'm going easy. But believe me, I'll be turning my head there in about 5 minutes. Look, it's slowing. As Jenny points out, it is slowing. To Joe's point, I don't care where the fundamentals are if they're improving by the end of the year. What's the stock going to do in the interim? You say it's going to be volatile? I bet I could pick it up at closer to 200.
But, I mean, when Satya Nadella himself says that it's going to be 2 years of pain for tech, what makes you think that all of a sudden things are going to correct by the end of the year fundamentally for the company? Isn't growth just going to continue to incrementally slow in the cloud until there's a meaningful change in the economic environment that we're in? What do you think, next quarter they're all of a sudden going to revert back to the kind of growth they had in prior quarters?
Nope, never said next quarter. I said by the end of the year in the coming quarters. Could I be wrong? Absolutely. I could be wrong that there could be more of an extended time for that recovery to unfold. I want everyone to understand something. Look, the stock summit is great. It's awesome. I love participating in it. It's a privilege to do it. Okay? I have an ETF that's publicly traded. It owns Microsoft. There's a possibility that next Wednesday I come on the show and say the rules have suggested that we take Microsoft and move it to the sidelines for now. That's where my money is invested. 95% of my money is in that strategy. So the road could be rocky. I could stay in the stock. That decision will be made. Okay. But the road I'm acknowledging is going to be rocky, and that rocky road could extend for a longer period of time.
Look at it this way. We all know that these companies can't continue their growth pattern just by math, right? You can't keep growing 35%, year after year based upon their size. However, what's very tough for investors to give up and takes a while is that they're not necessarily growth companies anymore. They're so levered to the economy, as we're seeing with Microsoft, with workers, with labor force, et cetera, that they're squarely there. So that can hit these growth stocks quicker than what normal owners are used to. And that's my story.
Belski, you own it, and you suggested, I don't know, the other day that we're in the early stages of a new bull market. Did Microsoft confirm that for you?
Well, Microsoft's just one stock. Thanks for having us, by the way. And
it's not just one stock. It's one of the biggest stocks.
So,
with one of the biggest businesses that is levered, as Weiss says, to the economy.
The number's 5, right? So it's 5% of the S&P. We only are neutral Microsoft in one portfolio. The rest of the portfolios were underweight because of what happened with tech last year in terms of long duration assets. That's number one. Number two, to Jenny's point, amazing point, what are you going to pay for that, right? What are you going to pay for that? I believe that in low turnover portfolios, which we run for longer term clients, that you want to own earning stability. I was amazed when we ran the standard deviation of earnings growth on my team last week and looked at technology. And technology's standard deviation of earnings growth spiked a little bit last year, but now it's starting to tighten again. And so we've made the case that, like Bill, we look at Microsoft. We look at Microsoft and Apple are the consumer staples of technology. We want to own those because of the stable earnings. What are we going to pay for that? We're going to pay much over a market multiple, but at the end of the day,
well, you are though now.
Well, think about this though, Scott. And you know this from us being on the show. When you come out of a recession, you come out of a bear market, multiples go up. Period. Multiples go up. And we're still going to be a higher multiple on Microsoft, but that stability of earnings, I'm willing to pay for that. I'm willing to maintain that. I'm not saying overweight the stock. I'm saying maintain positions.
No, but I want to.